Leading the Dow today, Walmart. That was the biggest gainer, up 1.6%. Boeing was the biggest laggard, down 0.7%. On the S&P, the winner today was Cody. Best Buy was the big decliner. And we're going to talk about all of these things in just a moment. But obviously, Best Buy, big issue that we've been watching so closely with the retailers. Winners and losers on this. Mike, you were there when the numbers hit this morning.
Yeah, I mean, that's always the pattern. And, you know, I think it doesn't really change the overall takeaway in terms of the condition of the consumer. It's all about where the stock was in terms of field position, what the expectation was, how much did it run up. And so, and of course, the guidance. So Best Buy being a little bit conservative here. But I think overall, a decent picture. Didn't really pull that much away from the overall market. It's interesting. We got kind of used to this familiar pattern with this market, which is it kind of reprices to a higher level and then kind of sits there. And so what we have here is new highs, of course, we've been talking about, but also round numbers. So this happened at S&P 2,700, 2,800, 2,900, gets there, thinks about it. I think holding those levels is fine right here.
Even 8,000 for the Nasdaq.
Yeah,
maybe
exactly, 26,000 for the Dow. Yeah. So, you know, I don't make too much of that, but it's on a calm week. It's the kind of thing where I think just hanging out there at record levels is okay, even if we're a little bit stretched in the short term. S&P up more than 8%, or just almost 8% year to date. Almost all that's come in the last 2 months. So I do think a pause makes sense.
Kari, pausing, but we have got breadth in the market, as Bob Pisani was pointing out earlier, and we also have slightly lower volumes. Sum up the sentiment for us overall.
Well, I would say it's slightly difficult to gauge the temperature of the market as I was walking over to the studio and it's 100 degrees out on one of the quietest days of the year. But we obviously have had this breadth since the beginning of July, where you see 7 of the sectors of the market up over 5%. And that contrasts to the first half of the year, where if you took out technology and a couple of other names, such as Amazon or Netflix, you'd have a flat to down market. So we're seeing much better response to the strong earnings. You know, the second quarter was up 26%. And investors really liked that. And they like the fact that the consumer is spending more money.
Neil, what do you think? I mean, we can talk about the wall of worry that the market's climbed. Does that make you feel better to have it here?
Well, I look at it. The underpinnings of the market are very, very strong. Are we going to have a correction? Probably. We've already had 18 to 20 corrections, with the most being 15.75%. But, you know, the ones under 10%, Becky, they came back within 19 trading days. The largest one came back within 49 or 50 trading. They were very short-lived. But the underpinnings of the market, you're talking about corporate earnings, the cash that's grown on the balance sheets, the dividends that are being raised, the buybacks, the M&A business, low interest rates. I mean, everything is there for the continuation of bull market. Will you get a pullback? Yeah, it will scare people.
But wait, is that an argument to tell people, you know, don't wait? Go ahead and jump in now because it's here, and if you blink, you might miss it? Or is that an argument to say wait for a little bit of
It's sort of like a small town. You go through and you go, where'd that one go? Yeah. Because it happens so quick. But if you buy quality, and there's still a lot of quality out there to buy in value and hold on to it, you're going to be fine.